Good morning to you. Thank you for joining us on Business Morning. I am Bisi Adebayo. Oil prices have hit a 9-month high in early trade today after government data showed a fall in U.S. crude stockpiles last week, while progress towards a U.S. fiscal stimulus deal and strong Asian demand also boosted prices. Brent crude futures rose 0.9% to $51.53 a barrel, while U.S. WTI crude futures were up nearly 1% to $48.28 a barrel. Both benchmarks hit their highest since early March. According to the Energy Information Administration, U.S. crude inventories fell by 3.1 million barrels in the week to December the 11th, more than analyst expectations of a 1.9 million barrel drop. And back home now, the president on Wednesday ordered the immediate reopening of 4 land borders in the country following what he describes as a drastic reduction in cases of smuggling of weapons and other illegal items into the country. The decision to reopen the borders was reached at the end of the virtual Federal Executive Council meeting decided over by the vice presidents yesterday. The land borders had been closed since August 2019 as part of efforts to curtail smuggling and illegal importation of drugs, small arms, food and agricultural products into the country. The Minister of Finance spoke to State House correspondents after the meeting, and here's what she said.
His Excellency the President has approved the recommendation of a committee which I chaired with the Minister of Industry, Trade and Investment as member, Minister of Interior, Minister of Foreign Affairs, National Security Advisor, the Controller General of Customs and Immigration. This committee was mandated to review and advise Mr. President on the opening of the Nigerian borders. And after our work, we recommended to the President, and Mr. President has approved the reopening of the 4 land borders, namely some southwest part of the country, Ilela in the northwest part of the country, Maitagari in the northwest and north central part of the country, and Mfu in the south part of the country. So these 4 land borders will be opened immediately, while the remaining borders are directed to be opened on or before 31st of December 2020. Mr. President has also directed that the reopening of the borders, while the borders are being reopened, that the ban on the importation of rice, poultry and other banned products still subsists and will be implemented by the border patrol.
And that will form the basis of our first conversation this morning. And we're getting the views of the Director General of the Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadiri. Good morning, Mr. Kadiri. Thank you for joining us on the program. Of course, just like many others, I'm sure that you're quite excited about this directive for the reopening of 4 land borders, of course. But did this announcement come to you earlier than expected?
No, it didn't come. Well, thank you first for having me. It's a pleasure to be in touch with you again, having been away for about 10 months. I think the information didn't come to me as a surprise. Neither did it come too soon. We have been expecting it, and we are glad that it has come at last. Because we did indicate that closing the border in whatever form is not a sustainable activity, and it is not something that a nation should engage if possible. We did understand the basis for government closure of the border because it was to check smuggling, which was becoming very worrisome and in alarming proportion. We also knew, according to government sources, that small arms and other trade infractions were taking place. Small arms were being imported, and there are other trade infractions are taking place across the border. So there was a basis for it, but then it was prolonged, and we were actually beginning to suffer in some measures as manufacturers in Nigeria, and I think other economic actors, especially those who perform in formal trade and even formal trade across the border. So it was becoming a measure that had outlived its usefulness and should probably have been opened before now. But it's a welcome development anyway. It's a welcome development.
Yeah, let's just go back to the reason why the borders were shut in the first place, some of which you just alluded to, talking about smuggling through the borders, the security issues, weapons proliferation and all that. Would you say that we actually achieved the aim of shutting the borders in the first place?
Well, that remains to be seen. But for a fact, some of our industries, for instance, experienced some boom in terms of restriction of the importation of those products, rice, poultry, and so on. But it is not certain to me whether we have been able to put in measures during this closure that will not return us to the situation we were before the closure. Have we, for instance, been able to ascertain the routes, the method, and the flow of those smuggled products? Have we been able to put in technology to assuage these problems? Have we been able to deepen the collaborations between the agencies of our neighboring states that will prevent a recourse to what happened before the closure of the border? Have we been able to establish the needed synergy for us to have a seamless flow of land border activities, eliminating the negative ones? Because let's face it, our borders are porous, and we are neighbors that have a history. In some places, it's very difficult for you to even identify the borderline. So we needed to develop a more sophisticated and ingenious way of ensuring that we allow only legitimate trade across the border. So have we, during this time of closure, been able to put in those measures that would justify the closure of the border? If we have not, then I don't think we have learned any lessons, and we have just lost revenue and allowed businesses to suffer. Tough decisions like this should be taken as short-term measures. It's not sustainable. And don't forget that we are into some agreements, both at the ECOWAS level and even AfCFTA that is expected to kick in a matter of weeks. So these kind of measures will not normally be tolerated. But as a nation, you have to take steps to protect your citizens and to protect your economy, such as closures. But it must be short-term, and you must achieve your objectives quickly and reestablish relationship. Otherwise, you start to hurt yourself, which is what has happened in this case. But I think the hurt will only be worth it if we are putting measures that will not allow us to have a recourse to what was happening before the closure.
Now, with all of what you've said now, let's look at how activities will pick up around those borders. What do you anticipate as a manufacturer?
Well, I think as a manufacturer, I'm happy, and I look forward to my members who have established value chain across the West African sub-region to resume their businesses with their subsidiaries and business partners on the other side of the border. I also look forward to increased activities of small and medium traders that trade our goods. If you check all over West Africa, you have Nigerian manufactured products strewn everywhere. So we are going to witness some increased capacity utilization. Our warehouses that are bursting with unsold inventory should find expression in those countries. We should also have ordinary people who live on the economic activities at the border resume their normal life. And the buoyancy of Africanness that we have shared by those border communities should resume. And I think it will be good for us. However, like I said, there are downsides and there are the good sides. So we need to be able to juxtapose the two. We need to be able to live with the positive ones and eliminate the negative ones. My members have called me severally to say that they are happy with what government has done, though it's long in coming. And it is done, I'm particularly glad that it came before the kicking of the African Continental Free Trade Agreement. I think that is a good plus. Otherwise, it will have left a bad taste in the mouth if we didn't open before then.
Well, many have also raised concerns that the reopening of these borders could actually now lead to a resurgence of smuggling activities again. Do you see that happening?
That would be a very sad thing. And it goes back to what I've said. We must have put in place measures to ensure that it doesn't happen. And honestly, it would be a very huge disappointment if it resumes, because already the country is sipping with concerns about the level of insecurity. I'm hoping that does not happen, and government should not allow it to happen. We have suffered in terms of social relationships. We have suffered in terms of economic losses. We have suffered in terms of trade. I mean, we should not now suffer insecurity, escalation of importation of small arms and so on from that axis. It will be a very bad day for Nigeria if we allow that to happen. So I'm hoping it wouldn't. I trust that government must have learned some lessons. And in the meetings that I know took place between security agencies, both in Nigeria and our bordering states, that happened throughout this time of closure of the border, must have yielded some useful information that will not allow that to happen again.
Now let's talk about.
I hope it will not.
Well, we all hope so too. But let's talk about some other issues that had always been a point of discussion even before the borders were shut and all that. Like talking about Forex availability, electricity, infrastructure, and a host of other issues. Now, how would you rate government's responses to these issues so far?
Well, I think I will pick on Forex availability. Ordinarily, it shouldn't be a matter of concern if government is trying to conserve foreign exchange. However, I think you need to prioritize when you have a period of scarcity and when you are in deep crisis, economic crisis. We needed to be able to fund productivity. We needed to be able to ensure that manufacturers, especially, are able to continue with their businesses unhindered. Because no matter how much you try to defend your currency, except you produce and reduce dependence on imported items, you will not succeed. So let me give you a scenario. A manufacturer produces, exports, earns foreign exchange. Let's say he earns $100 and he repatriates the $100. The central bank will take the $100 and give him naira at the official rate. And when he wants to buy his raw materials to produce and export again, he will not get $100 or more to buy from central bank. He will have to go to the black market or bureau de change and buy at a rate that is much higher than what was given to him as his repatriated profit. You are making the manufacturer poorer and you are bedeviling the production process. So some of these measures, and we have said it repeatedly to government, just has to be dropped. Another one that is related to the issue of foreign exchange is having to source your raw materials directly from the person who is producing. Whereas the quantity that is required by some manufacturers is not even worth a phone call to the person who is producing it. You need to buy from secondary sources. Such measures should be discontinued. So there are measures that government has taken, though in good faith, but you need to disaggregate the economic actors so that you will be able to effectively meet the needs that will fuel the economy. This is a time for you to be productivity centric. You cannot treat everybody equally because our contribution to national development, economic growth, and economic activities are not the same. So I think I actually feel very strongly about this, and we need to bring the conversation to an end where we'll be able to play on the side of wisdom, such that we'll be able to grow our economy. At this time all over the world, production activities is the darling of world governments, and Nigeria should not be an exception. I understand that the government is challenged in so many respects. Government is putting up its best performance in other areas, but there are critical issues that must be looked at and quickly too.
Now, last month, we saw the manufacturing PMI go past the 50-point threshold for the first time since the imposed lockdown, signaling improved activities. How fast do you expect manufacturing activities to help to boost local production, especially with the reopening of the borders?
Yes, I think everything should work out to make us head north in terms of our performance. But we need to also interrogate what the increase in PMI that you noticed means, essentially. If you are able to produce more and there's increased activity in your sector, the objective of manufacturing is not just to produce, it is to sell. As a matter of fact, if you continue to produce as a manufacturer, your products will become a burden to you, because you need to hire warehouses and where you need to stock your unplanned inventory, and you will start to pay rent in those places. So if you are not able to sell, and if the cost of producing it is high, and you are not able to sell, your problem is compounded. So I think that government has to take a much wider look at those positive signs that are emerging from the manufacturing sector. The sector that we must watch critically when a nation is going through recession is the productive sector, especially the manufacturing sector, because that is where you can have groundbreaking activities that can change the fortunes of a country. So we are seeing increased activities because we were held down for the most part of 8 months or 9 months. And of course, you expect buoyancy. The manufacturing sector is a very resilient sector in Nigeria, in spite of all the challenges. So you will continue to see northward movement in our performance when you narrow down on indexes like that. But there are other issues that also speaks to the fact that it is not yet uhuru.
All right, we need to wrap up the conversation in a few minutes, but then I'd like to get a projection of how Nigeria is most likely going to partake in the AfCFTA with the reopening of land borders.
Yes, I think we are now placed in a more comfortable position. Nobody is going to really accuse us again of playing in bad faith, and to that extent, I commend government for doing it before the January 1 commencement date. But at the same time, I think 10 years ago or thereabout, when we conceived and we started working on AfCFTA, we didn't imagine that we were going to implement it in a COVID-19 environment. We didn't imagine that most of our engagements across Africa will have to be done virtually. We didn't anticipate that even the bad state of logistics in terms of air links, indexes, and even shipping, we didn't imagine that it would be constrained. So there is need for us to open another conversation as to how AfCFTA will survive in a COVID-19 environment. And which means that we need to revisit those critical issues. The rule of origins that is yet to be concluded, and that is critical to trade in goods. The secretariat in Accra that is not fully operational. We need to talk about that. And we need to talk about the other logistics that needs to be put in place. However, I think we made progress along the line. AfCFTA offers an opportunity to get exposed to a 1.2, 1.3 billion market. I mean, that's a manufacturer's delight. So we are looking forward to it for whatever should be done. But the governments and the REX and the African Union will have to do a lot to help us to make progress on this very laudable agreement, even in these hard times that we have imposed on us by COVID-19. That's my only concern.
All right, that would be a good point to leave this conversation. Director General of the Manufacturers Association of Nigeria, Mr. Segun Ajayi-Kadiri, thank you for sharing some of your time with us this morning.
Thank you. Thank you.
We're still discussing the border reopening when we come back in just a moment. Please stay with us. Welcome back. The news of the reopening of 4 of Nigeria's land borders after over a year is still dominating the headlines. Well, let's get the perspective of the domestic commodities market, and the research analyst at the financial derivatives company, Dumebi Yeke, joins me now here in the studio to talk about that. Good morning, Dumebi. Thank you for joining us this morning. Of course, I'm sure you heard my conversation with the DG of the Manufacturers Association of Nigeria. Of course, this is welcoming news to many. So how will this news spur economic growth as we seek a path to recovery?
I mean, the first thing is that the border reopening itself, like you mentioned earlier, is a good step in the right direction. I mean, this would encourage inflow of goods, and service goods majorly, into the country, and the price of staples like rice could, decline, tomato paste as well. And, we've had issues of rising food prices in the past few months, and the truth of the matter is that as the border has been reopened now, we could see a significant decline in imported inflation and also, food inflation. And when this happens, there's some, cushion for some relief for consumers who are battling with higher PMS price, higher, electricity costs, and also food prices. So this is some relief. But at the same time, we're looking at this in terms of, okay, the federal government did this to, number one, spur local production and at the same time checkmate smuggling. So the question now is, the process or the measures put in place, to checkmate smuggling, are they effective? Are they well functioning? Because right now, we're not only going to be dealing with a border reopening, we're also going to, be dealing with the African Free Trade Agreement. So this is coming, they're coming at almost at the same time. So we're looking at this, that have this, these measures been put in place, and are they going to be effective enough to checkmate smuggling? And another thing is, we're also looking at the fact that consumers are put in a position where they're having, they're going to be, going to be put in a position where they're getting goods from, various countries, and then we're also looking at the effect of this on businesses, businesses that are into imports and exports. For example, we'll look at those who import phones. For example, this is a good thing for them. I mean, we could see the price of phones reduce. We could see businesses increase. We could, business activities rather increase. And, some of these prices would decline. It could also spur economic growth. But at the same time, like I mentioned earlier, the measures put in place to checkmate smuggling, are they effective? That's one question that we need to answer effectively. And number two, has local production been able to increase so much so that it's meeting domestic demand? And if the answer to these questions are still no, then we really have to go back to the drawing board to ensure that this thing that we've done, as much as it's going to spur economic growth and also taper inflation, which are two things that we need right now, as the trade agreement kicks in, I just hope we're not going back to square one to make sure that the reason for closing the borders in the first place, we're not just going back there.
Now, let's look at the effect on the price of some commodities. Rice, for instance.
Yes.
I mean, many expect that this would probably, help taper down the price of rice. But then, let's not forget, rice remains on that list of banned items. So how do we reconcile all of this?
I mean, it's a very tricky situation. So, people are just going to be stuck in a situation where are they going to, are we going to see an increase in foreign, rice? Or are we still going to stick with the local demand? So, like I said, it's just a very tricky situation especially for commodities that are on the Forex restriction list. So, but at the same time, we just have to keep our eyes open and our fingers crossed to see what other policy directions would come after this decision to reopen the borders and also, spur an increase in food supply, both domestically and, from the international markets.
So what sort of commodities are we likely to see the price, taper down, talking about food items and all that? How much of effect is this going to have in
commodities like tomato paste could decline because we import that. We could see a decline in the price of sugar. We could see a decline in the price of flour. We could see a decline in the price of, corn, maize, wheat as well. So these are some of the commodities that, we could see a decline in their prices.
All right, and I'm sure that comes as jerry news to many, especially as the festive period. I mean, Christmas is just less than 2 weeks away, so this is some good news then. Well, let's talk about another piece of news that came in this week, and that's talking about the directive by the NCC to telcos to deactivate SIM cards that are not tied with the NIN. How do you see this? Is this another bottleneck, or is it another economic stimulant, according to what you have on the slides?
The first thing is that the aim for doing this in the first place it's a good one. The direction itself is good. But when we look at the time frame and we look at the constraints to getting NIN numbers and the time that it is coming at, we're in the COVID times, and this is just 2 weeks to Christmas. So Christmas is literally almost here. We're 2 weeks in, almost 2 weeks into the new year. Is this really going to be effective? And how would this affect myself and you, that we all have phone numbers, and even the rural, people living in the rural areas? How would this also affect them? Number one, looking at the numbers from NCC, we have almost 200 million subscribers, people with SIM cards, and the NIN. We only just have about 42 million people that have registered so far that already have their NIN numbers. So there is a gap of almost 160 million people. So are we trying to say that 160 million people should get their NIN numbers in the next 2 weeks? First of all, how is that going to happen? Especially with the fact that we're trying to instill so much, effort in containing COVID-19. Between December 15th and December 16th, we had almost 930 new cases in Nigeria. So there would be a rush. There would be an increase in demand to get these NIN numbers. So the local governments, all the NIMC centers would be overcrowded, and this could increase, the cases, increase COVID cases. That is the health implication. Then moving to how this is going to affect business operations and, the economy in general. There are different categories of individuals. There are some people that, make use of their phones for transactions of over 5 million. Some others just 30,000 naira. But at the end of the day, everybody is making use of their phones for something. They have to communicate. So are we saying that? So in a situation where they shut out these people, how would businesses run? How would they make money? How would they do transfers? So we're literally cutting short a huge, chunk of business activities. And at the end of the day, productivity will decline. At the end of the day, output is declining. And this is coming at a time where we're also battling economic recession. So how is this now supposed? Is this a measure that's supposed to, spur growth and also encourage the telecommunications industry? But looking at the situation that this is, running in, it could, decline. It could cause a decline in our economic growth and business activities in general. And also, the truth of the matter is that certain measures have to be put in place to ensure that the way people can get their NIN numbers is effective enough. So I, for one, to get my NIN number took about 2 days. So how many people have that kind of time to spend 2 days to get these NIN numbers? So first of all, in the NIN centers or NIMC centers, first of all, there needs to be an automation of their processes. Technological deficiencies cannot be tolerated at this time, especially when you're giving people just 2 weeks to get the numbers. The truth of the matter is that the time needs to be extended for more people to, get the numbers.
Of course, between 2007, the House of Representatives has already is already seeking for a 10-week extension. But even 10 weeks is not enough to capture everybody.
If between 2007, when the talks of NIN started, and now we've only done 42 million, how is it possible for us to get 160 million people to get this done within 2 weeks? It's almost outrageous. But at the same time, like I was saying, there needs to be an automation of the process. This is some people already have their BVNs. If it's about thumb printing, their BVNs are already there. So there should be some form of, remote approach to this, where myself and you, we could actually make use of this. We could actually get our NI numbers on our phones. We have a form to fill, maybe probably on their website or something, and we're able to, put in our BVN numbers. It's verified, and from there we're able to get our NI numbers. While we're living in a technology era, and things could be done in a much more efficient manner rather than getting people to struggle so much to get these numbers.
Yeah, perhaps the authorities are listening and they're trying to come up with ways to make this
it,
actually easier for everybody. Now, let's talk about crude oil prices now. It's been about $50. I mean, as at this morning, Brent crude is trading at about $51 per barrel. That's some good news for Nigeria again.
Yes. So for Nigeria, I mean, it puts us in a good situation where we're able to increase where our oil revenues could, receive some significant boost. Our 2020 budget benchmark is $30 per barrel. 2021 budget benchmark is $40 per barrel, and oil price is trading at $51, dollars per barrel. So this gives us some headroom to gives the government some headroom to, number one, meet their budget obligations, and it's a very good thing for us because there'll be an increase in forex supply, which the CBN had been, battling with, and that caused a huge depreciation in the currency. But when we bring this to how it affects myself and you, this could be another increase in PMS price by 180 naira. Because now the market for PMS has been deregulated, so it could mean another increase in PMS price. So for Nigeria, it's a good thing because there'll be an increase in revenue. For myself and you, our pockets are going to be squeezed yet again to pay for PMS.
I don't know what reaction to give to that. But then let's also talk about another major downer, and that's the surge in coronavirus cases, with the latest numbers that we saw, almost 1,000 cases reported yesterday by the NCDC. Won't this erase some of the effects of these positive news that we've heard on the economy going even into the new year?
I mean, it's a huge discourse right now because there's still a lot of the isolation centers. I think I heard that they've been, reopened or something, and now we're seeing a spike in cases, and especially with this new directive about the NIN, there could be another spike in cases. So the truth of the matter remains that as long as myself and you were able to do our part, and the federal government and also state governments are able to instill, so much effort towards ensuring that all the COVID-19 measures are actually, being practiced, it could help to, reduce the spike in cases. And it's another signal that there could be a precision lockdown, especially in a state like Lagos that's recording so much cases, and I don't think we're all ready for another lockdown. But at the same time, everyone just needs to do their part to ensure that we're able to contain these cases as much as possible.
All right, let's talk about Forex. Of course, I know you touched on it briefly, but then we've seen the Naira trade at about 475 to the dollar at the parallel market. And then we're looking at Forex supply at the INE window, which is up 28%, so far this month.
Yes, so there has been a huge increase so far in December in Forex supply, and that's a major reason why we're seeing the Naira stable, because once there's an increase in Forex supply, there would be, some stability in the currency. So that's just the major link, for that. And at the same time, an increase in Forex supply is a huge boost and a huge support to business activities, manufacturers that have been complaining, bitterly about the shortage of Forex to do, their bidding to buy materials and also, produce. So this is a good news for them. And at the same time, for those that are engaged in a lot of Forex transactions, the Naira being stable is also good for them. So and the truth of the matter is that once there's stability, once there's currency stability, and producers or manufacturers are able to buy at a cheaper rate, it helps with domestic prices of certain commodities. So this is a very good news, in terms of currency stability, especially for businesses and myself and you, in a situation where we're having manufacturers produce at a cheaper cost.
It's good. I mean, Christmas is just less than 2 weeks, so we could actually do with this plenty of good news. Thank you to maybe Yeke, research analyst at the FDC.
Thank you so much.
Enjoy the rest of your day.
Thank you.
We'll be back in just a moment. Please stay with us. Time now to get a review of Wednesday's trading at the NSE with Didion Iwan. Good morning, Eddie. So the bulls are certainly not letting go of the markets just yet. It's looking like investors already have their Christmas celebrations made already.
Good morning, VC. You're right. The bulls are still in the market, and it seems like they've dominated the bears for now. But, let's see how that goes. We'll keep our fingers crossed, and we'll hope that this continues for the rest of the week. But yesterday, the market was up 0.76%, and that was due to buying interest in banking stocks and Nestle. We saw the equity cap rise to 18.550 trillion naira. Now, volume was higher by over 20% at 650.54 million units. However, value and deals traded yesterday were lower compared to the previous trading session. We saw 2.28 billion in 3,952 deals. Now, most of the sectors we track were positive. But to get a sense of the trading day, let's talk to a stockbroker, Charles Fakuga. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Thank you, Robbie.
Well, yesterday, the banking stocks and Nestle were the major drivers of the market. Now, apart from the banking sector, let's look at Nestle. What happened on that stock?
Yes, you will recall that Nestle has always been a market leader, anytime, anywhere. It's also as described as a defensive stock. So there were pressure for the purchase of Nestle, and that's why we saw the price of Nestle rising to that level, and of course that affected the general market.
We've had 3 positive trading sessions. Are we likely to end the week positive, or should we not get our hopes up?
Well, I see the market with all indicators, and of course some of the few macroeconomic numbers that are coming, though not too pleasing. The market has been resilient, so I see the market placing slightly in the positive direction today. Of course, this is largely driven by equities from the banking sector.
But with the positive sentiment we've seen from the beginning of the week, especially in the banking sector and the industrial goods sector, can we actually rule out, profit takers?
Yes, of course, you can't rule out profit takers because the market is dynamic. People are buying, and price will go up, price will come down. So, yes, you can't rule out profit taking, but I'm expecting that for today, the indicators we are saying the market is already positive. I see the market closing in the positive direction. Probably maybe on Friday, see some bit of profit taking. But as of today, I see the market closing slightly in the positive territory.
All right, Mr. Fakuga, we will join you with that optimism and hope for a positive trading day. Thank you for your time on the program. Charles Fakuga is a stockbroker. Well, BC, you heard Mr. Fakuga, and I know you've already spoken about the foreign exchange market, which maybe, but we will discuss that at the debt and currencies market.
Absolutely, Edidiong, and we'll come back to you just right after we see what's happening in London with Juliana Olayinka. Do stay with us, and we'll be right back in just a moment. All right, let's get to hear from Juliana Olayinka about the latest comment from the UK this morning, particularly regarding the coronavirus restrictions. Good morning, Juliana. The Health Secretary, Matt Hancock, is due to announce the outcome of the latest review of the 3-tier system, which will determine if towns and cities in England will be moved to a different tier of COVID restrictions. Any idea what we are likely to hear from him?
Good morning, Vicky. Well, Matt Hancock, the Health Secretary, his speech, which will be given at about 11:30 local time in a couple of hours, is going to be the last big act from Westminster before MPs travel home for their own Christmas holidays. And I think anybody that's expecting some Christmas cheer in the Secretary's statement is likely to be really disappointed, especially those in Greater Manchester and Leeds who have been in these Tier 3 restrictions for the best part of 3 months. If you take away the 1-month lockdown, people in England have been going on for the past month. Now, about 61% of the English population are currently in Tier 3, including parts of London, Hertfordshire, and other regions around Greater London. We were always promised to have this review today, but because of the increasing surge of positive infections over the weekend, it was brought forward on Monday, and many of us were plunged into these new restrictions yesterday. So it's really badly affecting the hospitality industry, and there are, of course, lots of calls about what we can expect over the next week, especially because, of course, we know the government has said that people across Britain will be able to spend 5 days with their loved ones.
But then PM Boris Johnson is once again asking people to keep Christmas celebrations short and small to reduce the risk of spreading COVID over the festive period. Are people even willing to have some sort of quiet Christmas?
Gosh, it depends on who you speak to. If you're somebody that's savvy on social media, then I would say the answer is really no. A lot of people are not happy. Once again, the government have done a mass U-turn, but the scientists and the health professionals are saying that there is no alternative. Yesterday, there were over 25,000 positive COVID-19 cases. Another 612 people died. The numbers are really surging, and we are starting to see that people are starting to get a little bit relaxed. They're starting to get a little bit fatigued again. A couple of days ago, we did have the most senior doctors and health practitioners around Britain putting out this joint statement asking the government to reconsider. And yesterday, there were some pretty high-level discussions with lots of the first ministers around the devolved nations, and we have had some change in the law. In Wales, in particular, where they are seeing a huge rise in infections, now it's going to be illegal for anybody to mix with more than one household. Nicola Sturgeon, the First Minister of Scotland, yesterday addressed the public and said that even though the 5 days have been permitted, that people should only see their loved ones on one day. And now the tone from Prime Minister Boris Johnson has changed. He gave a press conference at Downing Street yesterday, and he asked people to be extremely cautious, and perhaps they should not see their granny or see somebody who's vulnerable. But, some are saying this is too little too late, that people have booked the tickets, people have, ordered food, and they want to celebrate Christmas. But to what cost and to what effect, especially as we are still battling with such a crippling case of COVID in this country?
Away from COVID-related matters now, the latest monthly survey from IHS Markit and the Chartered Institute of Procurement and Supply says British companies are struggling to import goods owing to congestion at the country's main ports. Can you give us a better picture of this situation?
But it's been a major situation, not just at British ports, but at global ports. There are a myriad of issues, I think, in Britain. One of them, of course, is Christmas. We know the fourth quarter is always a really busy quarter. There's been a surge in online e-commerce, and typically at this year, you do get a little bit of bottleneck because of that. But then, of course, COVID-19 completely shut down shipping during some parts of the year. They're still facing that. But I believe with this IHS survey, one of the main sticking points has got to be Brexit. A lot of manufacturing companies are trying to stockpile. Even the own government have asked, hospitals to start stockpiling medicine, and it's becoming a major cause for concern. I believe there were some leaders within that industry that wrote to the Transport Secretary, Grant Shapps, last week asking for more assistance. But I think this IHS survey, which I believe registers and speaks to about 1,500 businesses, mostly in manufacturing, but also in services, the Bank of England really take what they say seriously. And the Bank of England obviously are having their two-day meeting with the Monetary Policy Committee. We are waiting to see what they've got to say about the British economy at about 12 GMT today. But it is a cause for concern, and it is going to be more of a cause for concern as we've got less than 2 weeks to the end of this transition period where Britain will be leaving the customs union and the single market if they are unable to strike a deal with the EU. And I think the warning sign from this survey is that if they are unable to cope, to strike a deal with the EU, then these shipping ports are just not going to be able to cope. And we already saw this last week when Honda decided to shut down their Swindon part, which is their biggest part in Europe, because they have been unable to get some repair tools through.
And I'm sure that many would not like to see more of that happen. Thank you, Juliana. It will be you and I again at 1:30.
Thank you, Bessie.
Let's bring back Eddie Young to review the debt and currencies markets. Over to you, Eddie. You have the floor.
Thank you, BC. Just before we go to the fixed income markets, the unlisted securities market was unchanged yesterday at 725.85 points, with the market cap at 539.52 billion naira. Now, we saw just 1,000 units worth 15.5 million naira traded in one deal. Now, at the fixed income market, the bond market closed on a negative note. It sustained its bearish sentiment, meaning that yields have been on the rise in that space. Now, there was a bond auction yesterday, of course, and that was oversubscribed. And, we saw yields increase at the short, the mid, and the long end of the curve. We had 16 deals worth 9.27 billion naira. Now, before we go ahead with the fixed income market, let's just talk about the foreign exchange market for a bit. And I have AfCFTA Taiwo, a foreign exchange trader at FSDH Merchant Bank. Good morning, AfCFTA. Thank you for joining us on the program.
Good morning. Thank you for having me.
Now, I would just like to start with this. What has liquidity been like, or what has activity been like at the foreign exchange market?
Well, the INE market has seen some improved liquidity as the CPN has been intervening in that market. So we've seen increased activity and liquidity in that market. And also in the parallel market, we've also seen some improved liquidity. Generally, I think liquidity is a lot better than it was before.
All right, so a report from FSDH yesterday showed that at the INE window, the Naira weakened by 0.17% to 394 Naira and 67 kobo. Now, what was responsible for that?
I think that's just usual market movement. I don't think it's significant enough to say it's a demand and supply market. So we're going to see those small adjustments. I don't think it's a significant enough drop to a weakness rather to attribute to anything. It's just normal market movements and rate.
Okay, but what's currently driving sentiment in the market?
To be fair, the market sentiment has been the same of what they've always been. I think a lot of market participants are excited, or they're interested in the increase in liquidity, which is what the market has been waiting for. And I think as market liquidity and activity improves, we should see those rates improve.
All right, AfCFTA, thank you for your input on the program. AfCFTA Taiwo is a foreign exchange trader at FSDH Merchant Bank. I will just move over to the Nigerian Treasury bills market, where we, saw yields decline in that space of the market. There was a primary market auction yesterday, and that was, of course, oversubscribed, and we saw yields drop. Compared to the previous auction, we had 13 deals on that counter worth 85.55 billion naira. The OMO market was also bearish yesterday. We saw yields increase in that segment of the market. We had 15 deals worth 95.95 billion naira. BC, well, that's the market now. The bond market is still, bearish with yields rising, while the treasury bills market has been relatively flat lately. So we'll see what happens going forward.
Absolutely, Edidi Young. We'll always hope for a profitable trading day. All right, Adida, we'll see you again tomorrow. And that's where we wrap up today's show. Thank you for watching. I am BC Adebayo.